Hello and welcome to another video on Technical Roundup. We've got a midweek update for you. Don is still on holiday enjoying life with his girlfriend, so you get me instead talking about BTC, ETH, Solana, AVAX, and maybe even the S&P. So, Fed raised rates, 75 basis point hike. The market liked it because it wasn't a bearish surprise, and the coins went up. So where does that leave us? Two structures on the weekly chart. First is, that, again, in terms of mean reversion, where do we go if the number really starts to visibly go up? I think around 30k has to be your bare minimum expectation for this thing to even matter. You can see that's the range breakdown from the summer range support, and it's also where a lot of these medium-term trend proxies align as well. Anywhere between sort of mid 30s is where you start to get some confluence, both horizontal and moving average wise. So there's your mean reversion target should the market start to rally. Also, in typical crypto fashion, it will typically overshoot to the downside and overshoot to the upside as well. So I don't expect it to turn around immediately should the market get there. And maybe some wicks, chop, churn, and some stuff that makes you feel like it's going to all-time high. But in general, when I reference mean reversion, I think 30k is the base case to have for that, and then see what kind of crypto native cope we can come up with should prices go higher. So the other level that's relevant is a 200-week moving average. Again, historically, this kind of bear market proxy for when is the selling going to end. We broke below it and have spent basically a month or so on the underside, and we're back up there again. It looks like from an eye test level, the reactions have been getting weaker and the market's becoming more glued and choppy at this level, which a lot of the time leads to just expansion. Like if sellers aren't going to sell it, and it's there's a lot of positioning underneath the level and they're all wrong, that's certainly fuel to the upside. And the fact that the rejections from this thing haven't been terribly harsh is in itself telling of the strength of that level, or at least the willingness to absorb the dips below it into weekly structures at around 20k, 21k. It's all the same trade essentially. So this is a good opportunity to revisit the daily time frame and the range we talked about on Monday, the title being Bitcoin threatens a failed range breakout or something like that. It's developed quite positively since then. Again, there's some contextual discomfort with this entire move being wiped out by one sort of news-driven rally, but we've got to take the chart for what it's worth, right? You can't always cope with news and ignore it when you like the outcome and don't ignore it when you don't. We just got to look at what the market's telling us. So just as a reminder, the range we had in mind for this type of structure was the highest close as the range high, the lowest close as the range low, and if we extend it, that's the premise of the consolidation that we were working with. So if we look at that, and we also remember that the 200-week moving average was super confluent up there, what we had on Monday was the market closing above this level, immediately getting sold, and then a move lower, right? Now, if you look at the most recent evidence, maybe the last 3-4 days of price action, this is by definition quite positive and constructive. Why? Two things. First, the market found support at the range midpoint, and actually very strong support, spent no time there. Generally, if the market's going to be weak, the range midpoint doesn't act as a turning point. So you'll typically get overshoot to the upside, and as soon as it's accepted back within the range, confirming a failed breakout, the range midpoint tends to be a bit of a stumbling block, like maybe it consolidates there or slows down. At most, it'll give you a retest of resistance, but generally in a weak market, a failed range breakout will almost always take you to the range low. In this case, it's basically the opposite of that. It went about as well as you could have expected it to have gone, which is that the range midpoint actually provided fantastic support, and then the very next day engulfed the entire move and closed back above the range. Now again, in Monday's video, my argument was that a double fake out is rare. So once you already have a fake out the range high, having a second one is far less likely, and that in itself is generally a pattern that leads to continuation, and that's what the charts are showing right now. So this is a good daily development because you have support at the midpoint, a close back above the range, and generally the lows of this being a fake out are lower than the first time. And I think if you just cluster off a lot of the areas we're dealing with, this 22, 23k, you've got the 200 week, you've got the range high, and we can just kind of box off this whole consolidation. And I think you can essentially take the view that on the daily time frame at the very least, as long as the market doesn't close below 22k or wherever this cluster comes from, it's worth being positive or giving this thing at least a chance to the upside. Simply look at Monday's logic, where my argument was if it closes back above the range after a failed breakout, that will be strong. And guess what? The market closed above the range after a failed breakout. So I'm assuming that's strong. And there's some extra confluence in the form of such a strong reaction at the range midpoint. Invalidation-wise, what would make this chart or market look crappy again? Well, it's essentially if this news candle retraces and we start getting daily closes back below 22k or thereabouts, that would suck. And that would just suggest that this is just all kind of news-driven chop. And structurally, not much has changed. And we're still within this consolidation. consolidation and still being capped in effect by the 200-week moving average. Still, the idea is fairly clear, and at least there's the tight areas of invalidation to deal with at 22k, at least on the daily time frame. But at face value, it looks like the failed breakout didn't lead to much, and we're back above the range high again, which is generally constructive and a good sign. So that's kind of the most recent development in BTC USD. Yeah, and again, very clear areas to work with. I think that's all I've got to say on that front. Um, yeah, as far as, and again, I guess the final proviso is if you want to be really conservative, you can still wait for the weekly close above the 200-week moving average and then buy dips the next week looking for a larger reversion. I don't know what the timeline on that would look like, or if it will be actionable. It's one of those wait and see things. But if you're uncomfortable with the daily idea, given it's technically still on the underside of weekly resistance, that's totally fine as well. I just quite like this sort of close back above the range high. That looks decent to me, and more importantly, it generates quick signals as to if you're wrong, right? So it'd be like a daily close back below. The idea is fucked, and it's just some sort of awkward lower high before moving lower. So yeah, that's BTC USD. Looks better than it has before. ETH also relevant. One thing to note on the weekly time frame, as we've spoken about before, I kind of just want ETH to go up, and that's because I think that the chart would look much clearer. In terms of where the market's been struggling and reversing right now, I know that there are arguably some wicks in this area, and people are using that as support resistance, but I tend to get much clearer reads on the market when it really pushes into an area of candle bodies. So if you look at where this most recent high came in, right, if we just take the high of the week and come it across, it's like arguably it touches kind of the bottom of this consolidation, if that. But as far as where the candle bodies are, all of these levels are a miss. The last low pre-break, all of those are a miss, right? And I don't like developing strong market views on very tangential pushes into wicks or poorly defined areas. I would much rather the market push into like a meteor volume cluster and an area of price action, which for me would be closer to 1700 to 800, right? You get a bit of this range low, the previous swing point, and all the candle bodies before the breakdown. This for me is a much better structural area, and I'd much rather get my market signals from that, which is around 1800, 1900, and maybe we even get the 2k round number, and then figure out what type of price action we'd get here at resistance, right? Is it just an outright rejection? Is it going to reclaim and then, fail? Whatever. Like the signals generated from those levels would be much clearer than this sort of awkward wick city. And for that reason, I'd prefer ETH to go up, to be honest. I think it would just make form a clearer view for the market in general. As far as the daily time frame goes, it kind of reflects that idea where the clear levels, like where the candle structure actually is back at the range high at around 1200 to 1300, or the pre-breakdown range low at around 1700 to 1800, right? Where the market is at the moment is neither here nor there. And it's sort of just, you have this awkward consolidation. I'm kind of tempted to read into it and say, well, look, last time I argued that a close below here would be a breakdown, and that's sort of bearish, and it would fill in a lot of this. Again, similar to BTC USD, it pinged off of kind of support very early. So if you wanted to be bullish about this, your argument would essentially be support, breakdown, full engulf. That's a failed breakdown. That's bullish. And as long as the market stays above kind of 1500 or wherever this level is, 1520s on a daily time frame, it looks good for continuation into somewhere between the pre-breakdown range of 1700 to 2k. I'm fine with that idea. It's not as actionable for me as BTC USD, for example, given it's just a bit like this consolidation is far more awkward than the Bitcoin daily range high. But structurally, I've got no issues with that. I still think, going back to last week, the better areas to do business will be a push into this pre-breakdown range or a pullback into this higher time frame support that it came from. This is still awkward for me. Maybe I'm happy, or I can accept, cope that this is a failed breakdown and it's going to go up as a result, but I kind of just want it to go up because I think the levels on the upside are much clearer, right? I just wanted to get out of this consolidation because for me personally, it's not generating a lot of signal. But yeah, structurally speaking, at the very least, it's not bearish because this breakdown didn't follow through. Clearer signals will come from higher levels, and I'd prefer a weekly push into those aforementioned 1700, 800, 1900, because that will really generate some clear signals in the next 1 to 3 weeks or whatever that may be. That's really it. So Bitcoin back above range high, that's good. clear invalidation. If anything below 22k, if it's some sort of lower high, if the news starts to retrace, if it just takes too long, anything like that would be shitty. But at face value, given these double breakouts tend to be rare, it's worth taking this seriously. And again, the conservative version of that would be waiting for the close above the 200-week moving average. And there are a few days for that to come to fruition. And the reversion targets, as mentioned, 30 plus for it to be worth it, to be completely honest with you. For ETH USD, it's kind of a no man's land where it is right now on the daily. This consolidation sucks. I'd much rather it push into the pre-breakdown range at 1700, 1900, etc. And that would give us some pretty clear signals to work with. So that's kind of what I'm keen on the weekly time frame. As far as altcoins go, I know there are some like specific catalyst-driven things going on. I don't really care. I want to get Bitcoin and ETH right, and then if that leads to a risk-on environment for the next wherever until the next Fed meeting, that would be awesome. But at face value, as far as these alts go, on the weekly time frame, they're still at resistance. Sol closed at AVAX closed at the range low retest. Solana also closed at its range high retest. So no kind of weekly risk on signal from altcoins at the moment. It would have to be either momentum continuation, kind of follow-up plays if BTC and ETH get moving, or lower time frame, at least daily time frame type of rotations in order to trigger those. That's all I've got. I hope it was helpful. Maybe on Friday, Don is still on holiday, so I'll do like a casual Friday with a guest, and we can do some more altcoin charts. Maybe Trader Main, tweet at him and tell him to come on Casual Friday. But that's all from me for the time being. I hope the slightly longer video makes sense contextually. Let's hope we maybe get some decent moves from this type of market. And I appreciate all of your comments and kind words. Thank you very much for your feedback. And as always, check out FTX for supporting the show. Mobile trading app, portfolio tracking, spot coins so you can't get liquidated like 3AC, and all that good stuff. Like, subscribe, comment, talk to me. I need friends. I'm sad. Donna's away. Thank you. Goodbye.